Good morning, everyone, and welcome to the European crossover webinar. Excuse me, just clear my throat. We've seen a heck of moves. I guess we'll just take a quick look at the S&Ps, and then we'll move on to everything else. Bear with me. And I guess it's almost like an overview in a sense, because we've had such a wild move. I was trying to think of a different word, but I don't think a better word is other than that, other than just it's been a wild move. We did see the S&Ps come back from the 61%, but they were under quite a bit of pressure when we opened up in the U.S. equity session, and then we took another dip. And I'd mentioned this 27.11, and we had got down here, and then we ended up holding out. The 27.11, if you look here, the market actually didn't make it to the 27.11 in the morning. We almost got there, and then obviously we did hit it in the after the market closed. I think the extension of the future session right after the cash equities close. Bear with me. Sorry about that. Just need to clear my throat. So we did go in and come back. I don't know if you saw later on, the administration was doing its coronavirus update or whatever you want to call it. And Trump was there, and he mentioned that they will be going to Congress. They'll be speaking with the Republican portion of the Senate, looking for some tax relief. I think they call it a payroll tax cut. And then also they were looking at some assistance for hourly employees in case if they get sick, they shouldn't have to feel like they have to come. And anyway, the point of that being is that it looked like the perception for the market was now they're starting to take some action to help, well, not necessarily just calm the market, which obviously is actually their primary intention, let's be honest, but to provide some, backstop. And so that gave the market some encouragement. Bear with me one moment. Hang on, one moment. Bear with me. And just talking to some guys in the chat room. Hang on a moment. Yeah, there was some confusion with the start. The start that we have for the webinar is just fine. The issue is a couple of guys were mentioning here. The webinar started on time. We have our daylight savings time. And I noticed yesterday, and I was just mentioning to some guys in the chat room, they're asking they didn't get the link in time, was because I noticed yesterday we usually get a tweet that comes out about 10 minutes before the webinar starts stating, hey, the webinar is going to start in 10 minutes. Yesterday, I didn't even see the tweet come across until at the end of the webinar, which, once again, if you factor in for time, would have come at the right time. But I guess the webinar start time or link has to be adjusted for the time change. I started the webinar yesterday on time, and I started the webinar today on time also. Actually, I even started the webinar a little bit earlier, but I was posting, sharing a story that we will cover in the chat room regarding the Italy and their non-performing loans and the potential, or that the ECB is going to need to do some action. But the issue with the time changes affected when we're sending out these announcements, and I think that's affecting when people are getting their email links for the webinar. Just want to go on and touch on that. But anyway, so we're here on the S&Ps. So we have come back, and we actually came up short just here. If you see this 28.57 right here, I can move it a little bit closer here. You can see it a little bit more pronounced on the 2 hour and 30 minute. You'll see here on the 30 minutes more pronounced. You can see this coming across here. You can see right where they actually ran into some trouble right there. Actually, this just matched up just perfectly. This 28.48 right here, as the market tried to go in and bounce back. We're pairing back a bit. If you look at it on a 5 minute, we actually have a little bit of a sell signal. But look at this on the 5 minute. Look how that came up just perfectly across there. But right now, like I said, the markets are responding, and we're seeing that just like we saw yesterday, extreme pushes to the downside. Today we saw some more into this Asian, early European session pushes to the upside, a little bit extreme, and you can see right here where they ran out of gas. Right there perfectly, 28.48. But that being said, we'll go in and move in, and you can see here where a little bit of a double top here, and then we go in and pair back. And we've also seen the 10-year note also pair back. I think Blake was short from around 39.09 or something like that. I don't know if he's still short overnight, but he was short. He had taken a short at that time. Also, we've seen crude oil come back. We'll take a look here. You can see here we bounced back, and we came under all kinds of pressure yesterday with crude oil. Let's see, we can. Yeah, right here's on the 30 minute. Well, it's 5 minute. There's a 30 minute. You can see all the one heck of a bunch of selling that this market's gone through. It was amazing to see, that we'd even dipped sub 30. We came back, and market's trying to push back a little bit higher. Gold's been up and down too. We'll take a quick look there, and then we'll just move on to the stories in FX. You can see here where we've fallen back down here as S&Ps have responded, come back down. We actually went sub 1650, and look how much we've rallied back. But boy, that's a lot of volatility here in the gold market. You can see right now we're at VWAP. We're just testing back VWAP. But just a lot of volatility. Then point of control coming in right there at 1669. A lot of volatility, to say the least. So with that, we'll go on and move into the stories. We'll look up what's on the economic calendar. But like I said, the economic calendar takes a little bit of a back seat to what's going on. So looking ahead into today, at the top of this next hour, we do have an Italian industrial output as well as Eurozone employment, but that's final. GDP, and nothing coming into the States. So GDP revised, Eurozone, which is going to be in not the top of this next hour, but the following hour, with employment also. The only thing that's going to be top of this next hour is going to be Italian industrial output. Tomorrow will be a big day here for UK data. We've got GDP, industrial output, manufacturing output, construction output. And then we have core CPI coming into the States. So some pretty key data. Let's see here, jobless claims and PPI. The following day after that, German CPI. And we wrap up the week, we'll have University of Michigan. We do have ECB, and that'll be coming up, which is going to be key. So let's just go and touch on the stories right now. I think that's going to help to provide a little bit of a context. Certainly, we saw an amazing rebound here with the Aussie and the Kiwi. Those are just unbelievable. Look at the Aussie dollar here, came almost all the way down to 63 cents before rallying back sharply, and now we've pared back a bit. And speaking to that bit of a paring back, it was an amazing pop back, but we faded on that. The Australian New Zealand dollars weakened on Tuesday on the nerves over the rising economic costs of the coronavirus epidemic and plunge in oil prices, though hopes for global policy support limited losses. The Aussie dollar was last down at 65.57 after going as deep as 63.12 on Monday, a level not seen since 2009. The Kiwi plunged to 60.08 in the previous session amid a global markets rout. It's clear we are in a new, incredibly worrying phase in this crisis, says Chris Weston. While we were watching the coronavirus count, the focus had switched lanes, and we were watching funding channels and credit spreads. Financial contagion is hitting risk for six and is breeding a new level of panic. Increasing bets of aggressive monetary policy action from central banks around the world offered a measure of relief to global markets. The Fed delivered an emergency rate cut only last week, and on Monday stepped up the size for its fund injections into the market's head of stress. Closer to home, the RBA is widely expected to cut its cash rate again in an all-time low of a quarter basis point next month. The country's government will soon announce fiscal stimulus measures to boost economic growth. Bond prices fell as investors mustered courage to dip back into equities, lifting yields from the record lows touched on Monday. And then on to the dollar. The dollar exchanged gains, but oil and coronavirus pose major risk. The dollar steadied somewhat on Tuesday after heavy losses against the yen, the euro, and Swiss franc, but traders warned the risks of the greenback remain high as policymakers try to fight off the widening fallout for the coronavirus epidemic. The U.S. currency started to grind higher as Wall Street stock futures rose and bond yields bounced after the U.S. Trump said the White House will hold a conference on Tuesday about economic measures in response to the virus. Secretary of Treasury Mnuchin said the White House will meet with bank executives this week. Then assigned the U.S. government is preparing to roll out more measures to soften the blow from the spread of the virus. However, analysts said it's too early to call a bottom in the dollar, which was pummeled on Monday. Expectations for a coordinated policy response are something that is evolving and ultimately could help. But in the short term, the dollar is driven by expectations of federal easing, and the yen also wobbled against major crosses, such as the euro yen and the Aussie yen, as the Bank of Japan officials indicated their readiness to ramp up stimulus if needed before a policy meeting next week. The dollar rose against the Swiss franc after 3 days of heavy selling to the lowest in almost 5 years, and oil futures bounced in Asia on Tuesday after the previous day's dive as global markets tried to regain some composure. But many traders warned that the recent turmoil has been so dramatic that the risks are still tilted down. The plunge in crude oil prices on Monday was yet another jolt of financial markets, which are already reeling as investors counted the mounting economic costs of a global epidemic. And also, however, it's rapid in Italy and the United States is likely to keep investors on edge. So with that, we'll move on to the story about Italy and their woes. And I thought this was key because it may ultimately impact what we're seeing here with the euro, which obviously had been rallying. Italy itself brings back a doom loop back to 4 and upstanding for the ECB. If a chain is only as strong as its weakest link, the Eurozone authorities need to act fast to support Italy and its banks, which are coming under strain, and the surge in sovereign borrowing costs and the economy flipping or tipping into recession. Already the bloc's most fragile economy, Italy, has been dealt a blow by a coronavirus outbreak that's forced it to order a virtual lockdown across much of the wealthy north. Well, actually, the news is they've actually the prime minister had already locked down the entire country. I saw in the news. But banks are emerging as a focal point. Economic recession will sour their loan books. But a bigger problem now is the exposure to Italian government bonds, the so-called doom loop, whereby a sell-off in government debt circles back to the banks because of their holdings. On Monday, Italian banking stocks slid more than 12%. Italy is a fault line across the European financial and economic system, said Paul O'Connor. Monday's dramatic move followed a blowout in the closely watched 10-year bond yield gap between Italy and Germany to more than 200 basis points for the first time since August. Essentially, that's a gauge of the premium investors' demand to hold Italian risk. The spread was around 45 basis points wider than levels seen late on Friday, marking the biggest widening since a political crisis in 2018. If the yields on Italy's government bonds rise further, banks holding them lose money and might be inclined to sell. Despite the introduction of tougher banking regulations, oversight in the wake of the Eurozone debt crisis, Italian banks held 388 billion euros of Italian government bonds in their portfolios. The feedback loop between the sovereign and banks in Italy is alive and well, and both sovereign and bank debt should trade in lockstep. So the building stress means Italy will at the forefront of policymakers' minds when the ECB meets Thursday. Looking at prices action and clear to us is that the markets are testing the ECB's resolve and are trying to force an acceleration of bond purchases. One idea under discussion is targeted long-term refinancing, referred before previously as TLTRO, loans on favorable terms for banks that require them to lend to households and businesses. But the sell-off in the Italian bonds also means a ramping up of the controversial asset purchases is more likely. I would expect the ECB to focus on alleviating liquidity tensions and facilitating the flow of credit. QE is powerful when you want to push bond yields lower. They started QE when Italian bonds were at 6 to 7%, but that's not the case now. So German CDs also rose sharply on Monday as German bond yields moved further into negative territory, creating more pain for domestic banks there. So once again, that can certainly go on and impact what we could potentially see here in the euro. And let's go on and start with the analysis. Now, look, when you see moves like this and what we've seen yesterday, you know, the unbelievable moves like right here, look at the Aussie dropping all the way down to nearly 63 cents and then rallying nearly 400 pips and then coming off of that 150 pips. The only thing you can go with is just levels, and these levels are going to be in a general direction, so to speak, because like I said, there's no definitive, you know, price you can say, okay, this is where the market's going to stop or turn around. So you're looking at generalized levels that you're going to get to. And you see here that the euro nearly made it all the way to 115 before paring back and closing just below 1445. So we're looking ahead. And actually, for whatever reason, it didn't save the. Oh, that's right. Yeah, it did not save the on this chart for the analysis I'd put in. But what we're looking at for resistance here is going to be this 1445 for immediate resistance with support, and we'll move into that. Let me get the buy chart up and run it. And we were actually looking at this yesterday. Remember when we did it, we were already having these big moves that we had actually put in our resistance. So the resistance is going to be here for 1445. We're going to go and take off the 81. And let's go and take a look at the support. You can see this dip in here, but the support actually comes in right there at 1342. 1342, the 1365. Now we're looking at a 2-hour chart, but the fallback here is right here at 1342, called 1343. But there is your first bastion of support, and below that is 1324. So obviously they're very, very close together. We'll go in and take a look here on the daily to see if we see something a little bit closer here. And you can see this is major right here, 1328. 1320 is absolutely major. Very, very key. So if we do get that pair back, we're actually going to go on and it's going to be 1365. Let's put it this way. Right there. And we would look for the market to go and come back and defend this area, 1328, which is just below those lows. So let's go and move into the cable. So the cable extended its gains amid the equity sell-off to reach 32 even before closing at 31.23. Resistance will be 31.66 with support at 30.51. You can see here we've actually dipped lower. I don't know why I'm getting these. I don't like having these little markers on the side because they just just cause. I don't like, and I try to remember how to get rid of those, but good. I don't know why it's giving this little time slot, but anyway, so we had I don't know what the heck that I need to get rid of that. Well, there we go. Thank God. One thing is now we don't have the time price. Let's see. Nope. Okay, well, anyway, we'll get, but you can see here right now we're at 30.61. We're looking for support at 30.51, followed by 30.07. So we're going to go with 30.07. The actual low here was 30.17. We had our secondary lows 30.07. That'll be support. And we'll move into the 2-hour chart to see if we can see something on the resistance. Right there, 30.85. And we are back above the pivot, so we're leaving that, pushing this back to bullish. So now moving to the Aussie dollar. So the Aussie fell to nearly 63 even before rallying back sharply in the U.S. session to challenge the key weekly level of 66.78. You can see that there. Resistance will be 66.63 with support at 65.44, followed by 64.54. And you can see here we've already actually come down here into the 65.50s areas. Let's go and take a look here on the 2-hour chart. I think to me, the key thing that I would impose is you're going to have to wait for these markets to come to the levels that you want and be selective with the levels that you are. Yesterday, I traded way in excess. I actually had 33 trades in this spooge yesterday, and it's just that was would have done far better by just letting the market come to me. And although it was a fast market, but to see those a little bit different in the S&P zone, to see those rotations. But I think one of the things I thought about yesterday was that you have to, even though the markets were moving fast, so I can see why that was happening. But that being said, still, I think you have to look for where these markets can potentially go to. Now, obviously, like I said, who can foresee something like this? This was wild. So, but at this point, as the markets start to calm down a bit, I think you have to look and say, okay, now where can we potentially go and bounce back to? So right now, if we do bounce back, it's going to be right there. It's going to be 66.05 on the upside. And looking here on the downside, you can see right there where the support's going to come in. Right there, 65.30. That's where you look for the market to find, for the market to go in and step in. Considering that that they're looking to provide, everyone, lack of a better phrase, financial support. I think that we probably won't see these markets come under pressure, at least not to the extent we saw. So I think we can keep it, I don't want to say keep it simple, but 65.30 and just underneath there is going to be key, which will be 65 even. So once again, let's go on and let's go and move into the Kiwi. Okay, the Kiwi battled back in the U.S. session after falling to nearly 60 cents even. The pair rallied back to near 64.50. Resistance will be the key 63.83. You can see that there's the pink line. With support at 62.89. We just tagged 62.89, followed by 62.47. So you can see here, we'll rally back now. Resistance is going to be the key 63.83. We already mentioned 62.89, and they've already come down here and tagged it, although they've come off of it. So it's going to be here, which we mentioned, 62.89. And the key level to 63.83. It still remains bearish. Now, where will we go to if we dip below there? The 62.89. If they want to test a little bit lower, we'll go and take a look on the 2-hour chart. The one thing that I think I would, at least I know I'm going to do is, for today, is I would offer is to trade slower today. Trade slow. Although I think that probably isn't, that's probably easier to think of, considering I don't think we're going to be dealing with the ranges that we saw yesterday. But that being said, I think that let the market come to us. Although I don't think we're going to see the crazy ranges we saw yesterday, nor the amount of volume that was trading. But that being said, I think now's the time for us to kind of step back and sit back and let these markets try and figure out what they want to do today. Today's probably a day to really, pick your levels selectively and go for bigger moves, I would think, or at least try and figure out scenarios of where you think the market can go to, so you don't get flipped around. But anyway, that being said, so where could we go beyond 62.89? You can see the support level coming in right there, which would be key, which would be 62.26. and 62.89. Let's go move into the dollar CAD. I mean, these moves are just so incredible. It's just, forgot how to remove these. There you go. There. So the dollar CAD gapped higher, never looked back. The pair high exceeded the 37.50. Support will be 36.08. And we've actually, looks like that's where we went to, followed by 35.63. So it looks like we did make it to 36.08. Pull this back. Yeah, missed it by one handle. So we had our support 36.08. That was the analysis from Asia. And on the upside, we're looking at this close, which is right there, which is 37 even. So and let's go move into the peso. I mean, these moves are just stunning. Let's go and take a look at the peso. So the dollar peso soared to take out stops above 22 before closing the day at 20.77. Resistance will be 21.18, followed by 21.43 with support at 20.56. So we did get just below that 20.56, followed by 20.28. So we've actually come down here to tag this area here. You can see that 20.34, or actually it's 20, yeah, it is 20.34. And just below that, will be right here, 2022. So let's go with this, 2022, 34. And I think, as I mentioned, the market's going to be a lot more calm today. So this upside is probably going to be rather limited, to say the least. So if we take a look at the peso, key resistance is going to be right there, 21.12, and that might even be a stretch to get there. So let's lower it to this level right here. You see that coming across? It's this low, matches up there. It's going to be 20.96, 20.96. And let's go on now to the dollar yen. I mean, these moves are just crazy. Wow, look at this rally all the way back. Holy smokes. Amazing. Look at that, all the way back to 105. This is exactly what I'm talking about, is that today's probably a good idea we saw the dramatics from yesterday, but today's a good idea to let the market come to these levels. But I would not even have thought we would come up back to this level, okay? But I'm just saying is that, think about, scenarios and how far these markets can go in and push. One of the ones I pointed out to was on the S&Ps, and if you looked on the 5-minute, came right to that 28.48, and just above that we have 28.56. But you have to think in these, when the market was like was asking, I'm talking about the S&Ps, like, where's the administration? What are they offering right now? And now they are offering something. So it allows that pressure to be relieved, and then the market gets that, like Blake likes to talk about the rubber band snapback rally. Well, we've seen it right here with the dollar yen, and what an unbelievable rally. The resistance is going to be right here, which is 464. We did get above 5, but where are we at right now? It's going to be 464. That 464 is the flash crash low. So, wow, we even got beyond that at the time. So hold on, 464. And support. $351, followed by 308. Well, you can see right where resistance is right here at 96.01. And that's what I'm saying. The markets respect these levels, or at least not say respect. The markets always remember these levels. Now, once again, you look at the yen, and who would have thought it would rally back that much? But look how extremely oversold it was. But you can see right where they came up to, and look where they ran out of gas at 96.01. So in the short term, we did have a level here at 95.64, but let's see if we're definitely 96.01, but we can see if we see anything just before that. So bear with me. Yeah, right here, 95.86, but they blew right through that, and they didn't run out of gas until right there, which is 95.94. 95.94, although on the daily, as you can see, they clearly went to challenge the 96.01. Right, I mean, they ran out of gas right there at 96.01. So, but we'll put it here for 95.94. And support. You can see it right there, 95.34. And let's go move into the cross rates. So once again, you can see here with the Kiwi yen really came off like gangbusters and saw this rally. The resistance is going to be right here at the 66.39. That's pretty clear, which is that prior low. And support coming right across, which is going to be 65.01. Things have quieted down quite a bit. So it's going to be 65.42. And right there, this low right there, 65.11. And you can see here with the euro yen, boy, what a rebound! And look where they exactly ran out of gas. Once again, we talked about how the market always remembers the levels. And right there, 1925, that's going to be the resistance, which they did run out of gas there. But if they were trying to challenge it, that's going to be it right there, 1925. And support. $18.19 for support. I mean, look at these incredible moves, and that's what I'm saying. All you can do is just go with the levels. That is just unbelievable. Almost all the way to 182. Look how far we've given back. It's just they've probably blown people out of the water on some of these moves. It's just incredible. Let's go and move into the euro odd. Resistance is going to be right there. It's going to be pretty tough to jump back up here. I mean, they've knocked some people out of the boat big time. Resistance is right there, 73.96. Support right there, 72.63. Followed by 71.64. Just like the same two, we have to move right in here into the 2-hour chart. God, look how far that it was, 100 pips away still with those highs. So resistance is actually going to be right there at that close, and that coincided with that, and then just got just a little bit above that, which is going to be 80.71. Right there, 79.23. We have the potential to move a little bit higher with against the yen. So it's going to be right here at 68.95. This should be solid support, which can be 67.70. But beyond that, I think we can hold in here, which is actually those lows, which is at 68 even. And let's go move on to the guppy. Pretty clear where they went to and where they're going to challenge, which is 37.07. Immediate resistance, 36.54. Actually, we'll do it right there, which is 36.81. And that's going to be support there, 35.33. Look how far away that is, but that's going to be support, 35.33. And with the starting odd, this one looks like it can almost break either way. We may go up here just to goose some stops before we rotate a little bit lower. Resistance, you can see the touch is coming right across there. That might be a stretch to get there, but you can see here. $99.33. And support is going to be 98.23. So there's the bias chart for the FX. I still think euro's a bit here susceptible. We referenced here what the ECB may have to go in and do in light of Italian banks. Looking back here, we'll go and take a quick look at the S&Ps. You can see them trying to rebound back again. $28.63 is at 50%. Remember, this is, and $28.53 is where the market had dipped to at the time, and we just exceeded that $28.63. I remember trying to buy down there. I think I remember even getting long with that. I think it was $28.64. And I didn't even stick around for that long. I think I grabbed like 4 handles or something. Then this thing, really rebounded. So you've got some pretty decent levels as far as what the market's going to remember. Obviously, the bigger resistance comes in here closer to 29. Market's trying to rebound here. Let's go and take a look. Now that's on the weekly. Let's go and move into the daily. You can see the significance of here of 28.57. You see that right here. This level, we talked about the 28.53. So let's go and move in now to the 2 hour. 28.65 is the 38% of this move on the way back. So that'd be 38% is a level that be looking at right here. They've already penciled in for the market. If you look just above it, $28.78. So you got a good little level here. And look at all these touches. So let's go on and put this across here. See right there, and then see, so now you got a good little level there between 28.56 and 28.65 is the 38%, and on the upside 28.77. So we'll try and pull this out a little bit further so you can see that. In fact, let's try and there you go. So you can see a nice little zone in here between 28.56 to 28.77. We'll mark that off. And in between, you've got 28.65, which is 38%. Now, like I said, be patient, because like I said, if you engulf this body, it really opens the door for us to push higher. Now, 28.65 is a 38%, but they'll probably try and challenge up here to 28.77, I would think. And then the next level just above that, 28.85. So just some food for thought right there. Interesting levels. I mean, levels of interest, I think that would be the focus for today. You see that? I think that's going to be key. 28.56 to 28.77, with 28.65 being the 38%. There we go. So that's what we'll be looking at. I am seeing crude starting to fall back down. Crude got up to 33.70, and now we've fallen back $2 in a short amount of time. We'll just go and take a quick look at that, and then we'll mosey on out of here. Look at this fall in crude. Holy smokes. In just a short amount of time. Look at that. We've rallied up to 33.70. And look how, and we've turned around and given back nearly $2. And an absolute just collapse right here. But that's all we have for today. Thanks for joining us here. And like I said, trade cautiously and be selective with your levels. And thanks for joining us here on the European Crossover Webinar.